Okay, good afternoon from here. Welcome to Crypto Thinkers team. I'm Royal Q. Today is Tuesday, and Tuesday we do compounding. Anything concerning your trading capital, how to trade with it, how to divide it so that you can maximize profitability in both ways of the market, whether up or down. So it's a 20-minute class, and I'm going to demonstrate to you. A lot of people, I see them mishandle their capital anytime the market pumps. Whenever they see the market is pumping, then it's like once they have some USDT, they want to just push it all in when the market is pumping high, 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 high. Maybe the market has made about 80% pump within 2 hours, and then they just want to be pumping their capital in, and when the market just reverse with a long red candle, they will now not have money to be able to buy the margin calls, the extra margin calls that have not been bought. That way, when the market dips, you don't even have any USDT to trade with. So I see a lot of people keep getting tempted to over leverage and to overuse their capital. So I just want to teach us how to manage our capital. You're a newbie, you just joined, maybe you have $200. That's what you brought. Crypto Thinkers, the minimum is 360 on the Excel sheet. We have the third version, which we have the $180 for one coin, which is called the junior split thinker. Yes, it's 180 per coin. And that strategy, we have coins that are good for you to trade with such capital. You get me? So just let me go to the board. You have a capital of $360. This is all you have in your Binance. Don't go and use this capital to trade one coin, which is very volatile. Because I always tell you that every asset have their own utility case. They have their own use case. Every coin moves differently. A coin will do so well this week, give you a lot of money. The following week, the coin would cool off. The coin will be doing what? Ranging. It's like accumulating. Are you getting me? So when that particular coin is doing that, and you've pumped all your life savings into one asset, whilst other assets are also moving, and you can't even get the assets to be able to trade them because you pushed all your money into one coin when you could have splitted them into different crypto assets that have different utility case. So you have a capital of $360. That is all you have. Don't use all the 360 to trade one coin. I keep saying it. Capital management, diversity. Diversification is good. You diversify, you split your money into two. So we're going to know what? Divide this 360. You divide the 360 by 2. You see that? And you're going to get what? You're going to get 180. And I said this 180, we have selected coins like GMT, ICP, and the rest. They are on our Telegram channel. So if you're there, you just check on the lecture hall. You see the selected coins there for the capital. Okay, so if you have a capital of hold on. You have $200. That is what you brought. You don't have to use all the $200 to trade very volatile coin. You go and pick a coin that dips very well, and you put all your $200 into it. What are you doing to yourself? You will make money for some time, and then by the time you realize the market has gone down and it can buy more margin calls for you. So we have a settings on people's capital that are $100, $200. So if you have $200, divide this $200 by 2. So you're going to use $100 for one of the recommended assets for smaller capital. We have assets that we use to trade small capital. It's not all assets you have to go and be trading on because it's pumping. When it dumps on you, or when it goes down or reverses to go and do a retest or a correction from where it pumped from, you will not have extra margin calls to be bought. You get me? So our settings for the $100 or $78 capital is on the lecture hall of Crypto Thinkers. If you are not there, you join. You ask on the general page and they will send you the link to join. You join, you see it, all the capital allocations are there, and the coins you should trade under them. You have to follow trading rules here. We have a lot of strategies. Royal Q is about strategies, capital, and then the market movement. So every strategy works differently when you set it in a way that the team is instructing you to do. You go behind and you do your own thing, you get stuck up, and then you come and give other people pressure when you yourself are the one who caused it. Are you getting me? So you have to make time to learn. So this $200 is all you have. You divide it by 2, you get 100. Now this $100, you use it to trade GMT, and then you trade ICP. Don't go and be taking volatile coins. Some coins, when they move, they dip so well. And if you don't have capital to mitigate the deep drop, you will stay in trade, not making profit the whole week. At least, even if money doesn't come today or tomorrow, the third day money should come. Because sometimes markets can be so low in volume. Trading volume might be very low, meaning there are less buyers and there are less sellers in the market. Are you getting me? Yes. So we try our best so that we can be able to get the right capital and the right asset. That is why we created the Telegram VIP page for all the teams. Various teams are here on this Crypto Thinkers Telegram page. We are here to assist you, mentor you. You add yourself to a mentor. We mentor you through one-on-one and see how best we can grow you up, because a lot of people don't want to learn. A lot of people don't like to learn. All they want is, I want to see profit. How the profit will come, I don't care. But you need to care because your money is there. This is money business, you know. So pay attention to your Royal Q. Know the features in the app. Know what it does. You go to the farm and you don't have a tool. You have the tool, you don't know how to use it. You don't know what to use it for. How do you get success? You'll be there and your other farmer will be making a lot of money, and you might be envious of that person. Why is this person getting more profit than you are? Because you are not doing that which the person is doing. Sometimes somebody can have $50,000 capital or $10,000 capital, but have a wrong trading strategy and wrong money management. Once you can have $1 billion if you don't manage your capital well with good strategy plus the particular coin to trade at every given time, that your $10,000 will not make a dime for you. It can make money, but it will not be compared to somebody who is diligently following consistently. You get me? Yes. So it's very important that you take the Royal Q business serious, so you would not just be there and the month is going and you're not making money. Now, another thing I've also observed is that we have people, when the market is pumping, let me wipe this place. When the market is pumping, we said on the 7th call, we mitigate. The 7th call, we mitigate what? 30%. 30%. And then on the 8th call, Crypto Thinkers, on the 8th call is what? 10%. We've mitigated. As soon as the market starts pumping, you are making profit on margin call 1, 2, 3, 4, 5, 6 levels, the market is pumping so high, you are getting your price alert. The market has pumped. This asset is doing so well. Rose is pumping. It has made 30% market pump. Obviously, you will get notifications and things, and you would not say that you don't know that Rose is pumping because you are always with your royal queue. Everybody holds their royal, everybody opens their royal key in their 24 hours, no matter how busy they are. They will surely go and check their revenue to see if profit has come. And then their strategy, margin configuration, and the rest is hardly they go there to go and see if the take profit trigger price is far away from the current market price. Now, here is the catch. When the market is pumping, you have mitigated on the 7th margin call and the 8th margin call, you are safe because when the market is coming downward, it will take 40% drop before what it buys both the 7th and the 8th margin call. This is why crypto thinkers, when you are trading strictly and you are following rules, I realized that a lot of people, when the market is pumping, they were tempted to open their 7th mitigation level. And they opened their 8th mitigation level, and all their margin calls was bought at the top of the market, which is not our strategy style. You'll be given the go ahead to release mitigation, and we've not given the go ahead for people to release the mitigation. People go behind and then they go and release the 7th call and the 8th call because they want their margin calls to be bought so that they can make bigger money. If you don't follow rules, all your margin calls will be bought very early at the top when the market is pumping and coming down. It will buy all your margin call fast. When you release mitigation early, you need to let the market cool off, let it calm down very well. Let it come and open the 30th margin call. Let it open it by itself. Don't force it to open. Don't force the margin call 7th and 8th to open by editing the 30 and putting 0.1. If a market has pumped, you've seen that the market is pumping, mitigate 30%. Now, it's pumping and you've gone to release mitigation, and within 2 minutes, the market goes down and it buys both your 7th, your 8th, your 9th, your 10th, and even goes to your 20th margin call, which shouldn't be so per our crypto thinker strategy. You get me? So you need to follow rules here. See, if you don't follow rules, if you don't follow our trading rules, you will get stuck and you think that the royal queue is not working. It is you that are not working. You have made up your mind not to follow rules. You are mismanaging your capital. You have $300 capital. You are trading over 10 coins with $300 capital. Why are you doing that to yourself? Why are you depriving yourself from making profit consistently? Even not every day, at least every 2 to 2 days, you'll be making something. But because of your mindset on when market is pumping, I'm going to release mitigation to buy more margin call. Forgetting that when the market goes down, it's going to buy all your margin calls fast. It's going to buy all your margin calls very fast. So it's important. It's important to do capital management. That is why I just want to, come online and hammer it again. People are not managing their capital well. You set up the trade, you fix in the strategy, follow the rules, follow the strategy settings. Don't go behind because the market is pumping. You want to over leverage. Over leverage, you are pushing more capital in a particular section than you should. You are putting more capital in a particular section than you should. So if you do that, what are you doing to yourself? Who is here? What are you doing to yourself? Somebody's microphone will always be on. When you do that, you are just putting pressure on your capital. And you go and do various different type of settings on one coin. If you're following crypto thinker settings, if you're following junior thinker split settings, follow it strictly by the settings rule. You can't come and put 5% whole position take profit on the whole position take profit on 5%. Distributed and take profit, you put 5%, 8%. And you want to trade with my trading strategy, Crypto Thinkers trading strategy. It will not work because you are not following the setup rule. And I've observed everybody, when I check, most 90% of you release your 30% mitigation very fast when most of the coins were pumping because you wanted them to buy the 7th and the 8th when you have not been instructed yet to release the mitigation. So I realized that the price of the coin made me know, your buy price, your average price made me know that you didn't allow the market or the robot to pick your 7th mitigation. You didn't allow the market to pick your 7th mitigation, which is 30%, when the asset was pumping. You didn't allow the robot to go according to our mitigation. You went to remove the 30% to reduce it so that it will buy your 7th call when the coin was pumping high up there. So when the coin was coming down, you've already released the mitigation. So the coin will come and buy Rocky will just come and buy all the margin calls very fast, because when the coin is pumping and it's coming down, it comes down very fast. It comes down very fast with a tall red candlestick. Very tall red candlestick. Maybe about 3. If it's an hour, about 3 hours of red candlesticks. Red candlesticks. Oh God. Just hold on. I was not even sharing my screen. Okay, so the 7th call, hold on. So the 30th, the 30% on the 7th call, the 8th call, which is 10%, we mitigate when the market is what? Pumping. It has pumped so high, you are getting your price alert. We even thought about how to set your price, market price figure into your price alert section so that it will give you an alert, and then you quickly go and then do your editing. It's a business. This is a digital business. You have your analog business. You pay attention to your analog business. Use the same energy to pay attention to your digital business also, because it's something where your money too is. So once your money is there, you have to learn the business. Profit will come if you learn how the profit comes. But you can't be stuck on the revenue and be looking at revenue every day when you don't want to go to your what? Your strategy summary dashboard. You don't want to go there. You don't want to go to your strategy summary dashboard. Let me just demonstrate something. Let me stop sharing my screen. Then for security reasons, let me just stop sharing my screen. Oh dear. Then I want to pull up something. So some of you, almost 90%, when the market was pumping 2 to 3 weeks ago, most people immediately it was pumping on that day, they went to remove their mitigation. They went to remove their mitigation so that the market will buy their margin call faster for them. When you do that and the market is coming back, it will buy all your margin call very fast. It will buy all your margin call very fast. So I'm going to share my screen again. I'm going to share my screen again. Okay. Good. So let me share my screen again. Awesome. Yeah, so for recap, I was talking about capital management. capital management. So I said, if you have $360, this is all you have. $360 is what you brought into your Binance pot. Let me see. I'm sharing my screen. Good. 360 is what you brought into your Binance. Don't use this $360 to trade one coin. This your $360 is the only capital on your Binance exchange. Listen to me carefully. Capital management in this space is very important. Some people, you mismanage your capital. You trade different types of signals with different types of strategies. You put 360, you are trading a first buy in amount with $200 on a one-shot signal. You pick somewhere. You don't know how the settings goes. You don't know what it entails. Then you come here, you come and pick the 360 settings and you want to trade it with the rest of the $100 on a $360 capital settings. We don't do that. You have to learn how to manage your capital. If it's 360 you have, I said don't ever use your 360 to trade one asset. I'm recapping. Don't use your 360 to trade one asset. Good. Now divide this your 360 into two. You get what? 180. Now, Crypto Thinkers, we have a 180 trading strategy. And we've listed some top 5 assets for you to trade on this capital because of the strength of your capital. Now, we don't want to trade the 360 on one asset because sometimes the assets, it's not sometimes, the assets have different use case. They move differently. See, an asset can make money from you from Monday to Sunday, and the following Monday to Sunday, that asset will lie down flat. It will not move. It will just be ranging. The asset will be ranging. Hold on. Let me just save this one first. The asset will be ranging. This one. Let me just, okay. Just want to get something. Good. So the asset will be what? Ranging. Assets will be ranging. Just look at it. Over here, this one is ranging. This is trending. The one that is coming straight is moving down straight. You can see it. And then the one that is going upward, you see the green candles are going up. Then this place is ranging. So you see that the trading amount or the profit that will come when the market is doing this will be less, because here the blue one here, it's coming down, so it will be buying margin calls that you have put pertaining to the percentages you have put on each margin call level. Okay, so when it's coming, this is trending, going downwards. This is ranging. So ranging is like what I call the cool off. When the market goes up, it goes down, it cools off in between. So you see that it went upward. You see that on the red line. And then after it went up, it goes down in the blue. You see that? I'm just using the blue as a marker. Then right after that, what does it do? It ranges here. Ranging is something like this shape. You see them in the advanced class. We'll be teaching that into details more, because the ones I've even taught, people are yet to even learn them and grasp them. So the more I'm packing more things, the more some people are not even getting time to even learn the previous one for them to even learn this one. So everything becomes plenty in your schedule, notebook, because you've not even learned the one we have taught you. And we are teaching new ones today. I'm moving, because February we are moving higher. So if you don't learn the ones we taught in December, November, October, and all is you are busy, how can you be able to learn the business? It's not only about looking at revenue. Go and see what you can do to make the revenue come. And that's what I'm teaching. We were teaching you things that you can do to make your revenue keep coming. So if there is a fault in your strategy settings, pertaining to your capital or the coin you're trading, we can see, you can learn that, oh, this is the reason why today I couldn't make profit. It's because the market trading volume for that day might be very low. Some of the ranging, they are very small like this. It's like M shape, V shape, M shape. Sometimes it's very small. So you see that day, the whole Royal Q or the whole crypto market, the trading volume for that day on that asset, you see that is very small. Sometimes it's not even up to $1 million trading volume. And it's fine. That is how the crypto market is. Even in our own industry and businesses outside, every day you don't make the same profit. In your cement and iron rod shop, you don't make the same profit. There's no day you make the same profit. Some days the market is so down. Sometimes maybe when there's a storm, there is rain, and those climate changes. A lot of people might not come to your market to do any buying and selling. Will you kill yourself in the shop? Or will you go and say, oh, people are not coming to buy, so I'm gathering all my things and I'm selling them out at a cheaper price? You go at a loss because the capital you put into the shop, the dollar value of those assets have reduced because of probably the external pressure or external economic pressure that is happening. So people are not coming to the shop to come and buy as usual. But when it stabilizes, you see people coming back to your shop to buy more, and that day you get more. It's the same thing here in the crypto market. When the buying and the selling volume of that day is low, obviously your profit will be low. When the volume of the price of that asset, the trading volume for that 24 hours of that asset is high, the buying and the selling is high, obviously you will make a lot of profit. And you've seen it. So here, this is one of the ranging thing I was just trying to let you know. When market trends upward and it trends downward, it ranges before it sees if it breaks this support and resistance. We learned about it, support and then resistance. It's also found in the range, the ranging part. We also call it accumulating. It's like it's gathering momentum, or we sometimes use the layman's English, is cooling off. After it has worked upwards and downwards, it cools off. When it cools off and it breaks, so it's going to break this one downwards or it's going to break it upwards. It all depends on market news, market sentiment, market buyers and sellers. You get me? It's not Royal Q. Royal Q doesn't control the market. You put in your good trading strategy, you've put in your capital management, you wait for the market to move. Either ways, you make money as long as you are following the rules. Okay, now you have knowledge about the trending market, up and down, and then when it's ranging, and why the profits on some days are bigger and the profits on some days are smaller. You get that, add it to your note, so you have a relaxed mind. You go and check your take profit trigger price and your current market price is far away. It's two things: either during the pump of that asset, you open your mitigation very early, or you didn't allow the market to buy the mitigation level. That's it. You didn't allow the market to buy the 30% by itself, the 10% by itself before it went to the 9th level. You went to remove it earlier than expected. Okay, so that's why all your margin calls have been bought at this time of the market. This is the time that the market has come down after it has trended upward and then it came down. Now it's ranging, accumulating. This is the time you have to have extra USDT to be buying, so you can be making money in this ranging part of the market, because this ranging market too has some money, because you're going to buy it at a cheaper price and you get more quantity. So when the market makes a little volume of 1% or 1.5, you see that you'll be making money even if you spend 2 weeks. Sometimes it can spend 2 weeks in the ranging phase. Remember, it can spend 2 weeks to 3 weeks ranging before it will even do the trending upwards and downwards. So note that. So let me delete this one. Good. Then we come to the place called let me just touch here. Capital management is key, and also the market for that day. So all these candlestick you see here, I've taught this class before, but just people are not learning. They are just focused on the revenue, but they don't know why the revenue is not coming. You have to go and learn the reasons. So these are the reasons why the revenue is not coming consistently. One of them is the market candlestick for that day, the market trading volume for that day. Yeah, the market trading volume for that day. Let me call somebody that the internet is good. Okay, Miss K, please, am I audible?
Yes, you are. Good morning.
You can see good morning, ma. You can see my screen, Miss K.
Yes, I
Mrs.
can.
K. Okay, thank you very much. Thank you so much. I'll be finishing the class very soon. I started long ago. So this is another reason why the market is slow when the profit is also slow in coming. You take a look. Everybody watch it. If you miss my classes this year, don't miss my classes, okay? Even if you miss it, I'm recording it. You just watch the recording. So everybody have a look. See, this place is called D1. 1 day, meaning this chart, every single candlestick you see here, every single candlestick, whether red or green, it took 24 hours for it to form, to close like this. Each candlestick. So you take a close look at it. Every day's market candlestick is different. So that is why this place is not a Ponzi scheme where you can be expecting $5 every day as fixed income consistently. You can't get a fixed income all the way through to the year end. Some days you get $5, some days you get $20, some days you make $100, some days you make 0.1 cent. You hear me? Just hear me and know that this is the crypto spot market. This is the crypto market that I'm teaching, spot market. Each candlestick here, 1 day. You see that the green candle, this is today's candle. Let me use another color. Okay, this is today's, oh dear. This is today's candle. You see that it has not finished yet because we are now at 2 p.m. or so in Ghana time. So this candlestick, if you watch it on the ADA USDT, you will see that by the time it's 12 midnight, go and check the shape of the candlestick. So you see that every candlestick on that day has different volume, trading volume shapes. So you see that the previous day, which was yesterday, look at the candlestick. You see the green part is very small, and then there's a stick. It's called wick, WICK, candlestick wick. It just simply means that the buyers try to push the market upwards, but it ended up being pulled down by the sellers a little bit, but the buyers still closed the market in green. Green means buyers, red means sellers. Green candle, buyers, red candle, sellers. You get me? Very simple. Just add it to your notes, okay? So the previous candle, you see this one? See this green candle, this big green candle. You see that day, this is day 1, day 2, day 3, day 4, day 5, day 6, so day 7. You see that green candle over here, this green candle. You see it's big, but the previous day, there was a red candle downstairs, and it was small. So this green candle on that day, you go and check on your revenue. You will see that day's candle, you made a lot of profit. But the previous day candle, which was red, and probably margin calls were not bought, you see that day you didn't make a lot of profits. Sometimes too, the candlestick can be so small. Have a look at this one. See the candlestick, the sell, this is the whole day. See how small it is. And this one too is the whole day. See how big it is. So this tells you that every day and the profit you make, some days the profit will be big, some days the profit will be small. But if you want to make consistent profit, you have to what? It boils down to capital management. You need to manage your capital very well so that you can have extra USDT backup in your funding wallet, so that whenever the market dips, you now have the what opportunity to enjoy the rest of the margin calls that is yet to be bought. That way, when the market is deep down right now today, people are still making profit on roast. People are still making profit on bake. People are still making profit on cake, ING, name them, all the coins, Mana, AVAX, Solana, Aave, they are all on our coins, listed coins for the year. You see that they are managing their capital so well that they are still, the robot is still buying margin calls for them. And they are still making profit today. Even if it's not much, $2, $3, hey, $3 in somebody's local currency can sort out their afternoon food and evening food. At least you can buy something to eat and drink with that $3 or $2. The next day you might even make, sometimes you make $3 today, tomorrow market will pump, and then you make like $60. And you come and you be like, this is the first time in your life you have made such money in 24 hours. This is how the market is. This is how the market is. So manage your capital well. So one thing I want us to also learn as we are moving, I'm doing the top up of the syllables. So I'm on the syllables of the mitigation, and how when you mitigate and the market is pumping, this is how we do it. We go to trade setting. The market is pumping. I've mitigated. Let's wait for it to load. Let me see if I'm still online. I'm good. Okay, Miss K is not here.
Yes, you are good. We can hear you. Sorry about that.
Okay. All right. Okay, my margin configuration is not loading. Who is holding it? Let me see.
It's
Oh, good. It's back.
Network is holding it.
Oh, they should leave me alone. I'm teaching my people. They should leave me alone. Okay, so we are here. So everybody, we can now see the margin configuration. I will be ending in the next 10 minutes. So the class, so some people have difficulty in watching recorded video when you see 1 hour. When you see 30 minutes, it's good. They can watch it faster. So I will try my best to split the classes so that I will just spend 30 minutes on each section. So we've mitigated on the 30% and the 10%. Now, everybody, here is the catch. When the market is pumping, assuming you have compounded here, my compounding here is 10 because I've already calculated the compounding per my first buy-in amount. Now, when you have a number here, 10 times, and you've mitigated and the market is pumping on the first, second, third, fourth, fifth, divide this one into 2 and add half of it times to this place. I have 10 times. I have 10 times. I'm ending with that so that the class will not be long. I'll continue in the next section. The sixth call, you have the seventh call, sorry. You have 10 times. So I'm just using an X to demonstrate the 10 times. God help me. Yeah, 10 times. Then your sit call, you have like 2 times over there. Divide this one. This your 10 times on the 7th call. Divide it into 2 because this place has a combination of your capital and then a part of your capital and then your what? Your profit. So assuming your profit was 5 times after getting your $100, which resulted in the 10 times, I said when the market is pumping or when you mitigate, As soon as you go and mitigate, make your sit call. Divide the seventh call, the number of times on the seventh call, divided by 2, you get what? 5 times. Now, take this 5 times to your sit call number of times. Add it. Just add the 2 that is on your sit call. Add the 2 plus 5. So your sit call will now have 7 times. You get me? So that you now leave your 7th call at the 30% drop still there, and the 8th call to 10% drop still there, but your capital and your profit, you would have divided part of your profit, and part of your profit will go into the pumping. Then the rest of the part of your profit plus capital will now wait for the market to dip so that it can buy the margin calls and be buying and selling, and you'll be making profit when the market is also dropping. So you make money both ways with about 50% of your capital up, 50% of your capital in the downtrend. Yes, so I'm demonstrating it here. So what I just said, the 2 is already here. So I already have 2 times here. I have 10 times here. Now I go and divide this 10 times into 2. So now here will turn to what? 5 times. Then I add the rest of the 5 times to this, my previous 2 that is already here. I add it, making it 7. And then my sit call, my 8th call is maybe 10, or depending on the capital strategy you are using. So this places the focus, the sit, the 7th, the 8th. You mitigate, you put your 30%, you put your 10%. That one is already there. We have a video on it. Now, when the market is pumping, go to your 7th number of times. If you have 10 over there, divide the number of times into 2 and it will turn to 5. Bring the extra 5 to your sit number of times. Bring it, add it to the 2, making it 7, because 5 plus 2 is 7. When you finish, you come down here and you confirm. Boom, you are done. So this is how we mitigate, because the market is going to pump very soon. So I don't want anybody to make the mistake they made when the market was pumping 3 weeks ago, and some people were coming into my inbox that they want to remove their 30% mitigation. They want to remove it. By then the market was pumping on that day, like within that 24 hours, the market was still pumping and people were making 3 figures, 4 figures, all the stuff. And they feel the first, second, third, fourth, fifth, sixth call were the only market that was being bought, and their 7th call has plenty number of times. They want that money all to go into the market at the top of the charts. They want all the money to be here. When we have other extra margin calls yet to be bought in the future when the market goes down, but they want to open the 7th and the 8th call. They want to remove mitigation when the price of the asset is around this zone. When the price of that asset is around this zone, they want to go and remove. And my inbox was flooded. I want to remove. Can we remove the 30% mitigation, because it's only buying number 1, 2, 3, 4, 5, 6. They wanted to buy the 7 and the 8. And I said, what is the purpose of mitigating when the market is pumping? So that we can have extra USDT when the market is going down, so we can get more quantity. Crypto is about quantity. The more quantity you possess, the more money you make. Sometimes the market will sell off and then you come and see $40, $30 in the dust. Like it's like a dust. Your capital and profit is gone. But because you bought more when the market was dipping, you got extra for that same number of times that you bought. You got extra because the price was cheap. So by the time it sells off, you see that you have dust inside, like leftovers inside the asset. And that time the market pumps, you see that that dust that was not there in your capital will now come and add up more. So I've cleaned some people's dust. They got almost $100, all because they manage their capital very well. So in conclusion, I said when you have a capital of $360, divide the capital into two. Trade GMT and ICP, or you do the cross. The cross, that's for those who have the smaller capital, the $360. You divide it by 2 and trade GMT ICP or GMT engine or GMT GMT hot HOT. These assets are good for smaller capital growing, so that when the market dips so hard, you will not be stranded and stuck for a long time before the market reverses. Now, those who have a capital of $1,000, this is what you brought in. I saw somebody trading one coin on the capital, on $1,000 capital. Don't do that again. You are mismanaging your capital, pouring all your capital into one coin. You put all your eggs into one basket. Once the basket falls down, almost all the eggs will crack. And getting them back on the sand, you would have spoiled the egg. You can't even fry it. So here, capital management is key aside our crypto thinkers trading strategy. Divide this 100, you divide it by what? 3. Just divide it by 3. You get 333. Now this 333, you can use it to trade the junior thinker on 3 different assets. Then going to trade one asset with all your $1,000 capital, because $360 is what we are using. $360 is what we are using. But when we divided it, we got 330. It's just about $27 difference. Now, it cannot pick all the 3 coins, all of them. It cannot buy all the 23 margin calls all at once. It's not possible, because every coin is different, and every margin call drop is not 1%. We have 3%, we have 2%, we have 5%. So before it to go and buy all the margin calls, it would have made profit for you, which would have been compounded over and made more profit for you. So this is another way to divide the capital. If you want to also maximize it, you can also use the 180. You can also use the 180 strategy. So you can divide your capital into 5. This $1,000, that is the only money on your Binance. Divide it into 5. You can do it this way. Then you have $200. You will get $200 for each coin. This way you can use the crypto tinker, the split. So junior split tinker is $180. It's on our lecture hall. That setting is there. Just make time and scroll. You will see it has been labeled 180 on a big screenshot, and the parameter settings has been laid there. You just watch it and impute it. Save, put your strategy on sub-beam mode real-time settlement. Then you click on start. Then you start your trade. You pick GMT. This way, with your $1,000, you can trade the GMT, you can trade Rose, you can trade Cake, you can trade ICP, you can trade Engine, you can trade Mana, you can trade AVAX. You see that? So you see that you have 5 coins, because your capital is $1,000. You divided it by 5. You are trading with the junior split tinker, $180 per asset. So I said those $180, just go and look at the assets. We have GMT there, we have ICP there, we have Engine there, we have Hot there, we have Cost there. Once it reach 5 coins, leave it to cycle. When your coin is pumping, you go to the 7th margin call, the 8th margin call, mitigate. If you've made profit, divide the profit. When it's pumping, divide the profit number of times. That times you see on the 7th call, divide it into 2. Give half of the profit to the 6th number of times. Save, confirm, and leave the trade to run. That's all. You have $2,000. You have $2,000. You can divide this $2,000 by 6 so that you can be able to trade those other assets, or you can divide it by 7. Sorry. Yes, you can also divide it by 8 so that you can trade 8. You can also divide it by 9 or 10. Good. This is good. So $2,000 divided by 10, you are diversifying your what? Portfolio, and you are trading according to the strategy. So if you have $2,000 in your USDT, divide it by 10. You can divide the capital by 10, giving you $200 per coin. So this $200, it can trade 10 coins on cycle mode for you. If you're a newbie, for 2 weeks, you cycle for 2 weeks. When the 2 weeks is up, you change it to one shot. Then you when it all sell, anytime it sells out, you can just go onto our sheet and then pick the next coin on that strategy we have given you. Then you replace it, or you trade the same asset again when you see that the asset has dropped, because you get price alert. So $2,000 capital, divide it into 10, you get $200 per coin. $200 per coin. So when you count, you make sure your coin doesn't exceed 10. It should be 10 exactly, because you are doing capital management. You would have about 10 assets and is trading under the 180 strategy settings. You can also decide to trade it on the 360 settings. So you just divide it. Maybe you can use 7. You keep adding until it gets to the 360. You can also use 5. You can also trade 5. Now, if you are using the 360 strategy, you divide your $2,000 by 5. You trade Rose, you trade Solana, you trade Aave, you trade Cake, and you trade Bake 5. If you have $2,000 capital, divide it into 5. It will give you 400. The reason why I'm making it 400, so that there will be a spare $40 at the back, so that it will serve as any high market volatility, like what we experienced few days ago when there was a global news impact. That one you or Royal Q can never control it, not even me. I cannot control the market. The only thing I can control is your capital allocation, and then your strategy, what strategy you should impute. Those are the things I can adjust. Those are the things I can control, but I cannot control the crypto market. I cannot tell the crypto market today, crypto market, I want red candlestick for the daily time frame. I can't do that. So you have to understand that we are trading with a global market. It's not only Royal Q that is creating the candlestick. Royal Q is just a monitoring tool. It monitors and it reads your settings, and it follows the market movement. But Royal Q is not a predictive future market tool. It cannot predict the future of the coin, how it's going to move. It doesn't predict it. It's just read the market movement, monitors it, and then triggers the margin calls when it is time for it to trigger it. So I'll just end this class. We'll continue. So this is one of the things I wanted to cut across so everybody can get it. So this is how we do it. I've already mitigated my 7th call, my 8th call. Then on my 7th call, I was having 10 times. I just divide this 10 times into 2, and I added it to my 6th call, whilst my 7th call is still under the mitigation, because the market is pumping and pumping and pumping, so that I can still be enjoying part of my profit here in the pump, whilst the other profits wait for the pull down of that asset. So basically that's it I want to do today. Thank you all for coming, and God bless you all for showing up. Let me screenshot attendance so I can use it to track all the members that are following. So I push you all to. Okay, so we good. So thank you so much for coming for our technical class, compounding class. So compounding is all about capital management, how to divide your capital, how to manage your capital according to the coins that will be given on the platform for you to trade. Don't be in a haste to go and release your mitigation when the market is pumping. Allow the system to be able to pick the mitigation for you by itself. Don't go and edit the mitigation to the number or the percentage drop you want. When the market is pumping, we said mitigate. Let the mitigation be there and enjoy your first call, second call, third call, fourth call, fifth call, sixth call, buy in ratios. Just enjoy the buy and the sell. You will still make money, and let the market come down by itself and pick your seventh call. Once it picks your seventh call, then you can now change that 30%, because now that it has picked the seventh call, which is 30% drop, you can now comfortably change it back to the original settings that was there for that strategy you chose. When it picks the eighth call, you now change it back to the original settings that it picked. And another thing is, some people, when you change your 0.1, you don't go and change it back to the original settings that was there before we told you to go and put 0.1. When we tell you to go and put 0.1 at a place, your margin call, let's say example, go to margin call 11, go and buy the next margin call, and I tell you to go and put 0.1 maybe 2 times. After you do the 0.1 2 times and you save, you confirm, and the market picks, go back to that 11th margin call, edit it back to what was there. So if it was 2% that was there before, I told you go and buy the next margin call 0.1. Once it buys, you will see a pop-up on your screen. Royal Q has bought and this coin margin call, you see it. Once it buys, go back and go and edit this 0.1 to the original Crypto Tinker setting you are using. If it was 2%, put back the 2%. Confirm and leave the trade to run. This is how we do it. But I see some people, when you tell them to go and do it, 0.1, then they come back again, my margin call, you go and buy again. You go and buy again. Then they leave it. When it buys and the market pumps and it's coming back, it's going to buy this margin calls very fast. It will buy here, buy here, buy here, buy. Then all your USDTs will be up there, because you did not come back to edit this 0.1, 0.1, 0.1 you did. You need to edit them back. So here, if it was 5% after it bought, go to your Excel sheet. What strategy are you trading with? Go back there and go and see the strategy. Number 13 is 3%. Number 11, maybe it was 8%. Re-put it back and click on confirm button. You save. Then you restart your trade. So this is the mistake I see a lot of people did during the pumping time, and then all their margin calls was bought within 3 days, and then now they don't even have USDT, because I always let them open their margin configuration, and some of them, they think they are smart. When I tell them I want to see your margin configuration, they quickly go and edit it to the original settings so that I will not see that they did this mistake. But I get to see it when I tap on your transaction record. That place alone is where I will be able to see that you bought the coin bought very quickly, because I will see it from the average price differences and the date is there. And I'll go and check the candlestick, and then I'll get to know that you edited. So for Royal Q, I just love it. It's transparent. It makes you see everything. Somebody say, I didn't put 0.1 there. I didn't know. You will go there, you see it. The price difference will just let me know that you went to edit it. And I got about more than 20 people. They did that. They didn't know. I just tell you, just go to transaction record. We scroll, I will see it here. So please, let's follow rules. So let's follow rules and we'll enjoy the trading. Thank you so much, everybody. God bless us all. And may we have a profitable trading month and the month ahead of us. Market is going to be very, very sweet in the coming days. So stay put. As you wait for profits, just go over this recorded video. Readjust yourself. I said everybody should put their trade on one shot. Everybody put your trades, all your trades on one shot, except the BTC Ethereum market trades. They are the only trades that are supposed to be in cycle. And then BSV is supposed to be on cycle. BSV is supposed to be on cycle, BTC market on cycle, Sabine Mood real-time settlement for 90 days. These are the BTC market before we switch to the middle one, which is the Sabine Mood. So BTC market, cycle mood. Ethereum market, cycle mood. BSV market, cycle mood. The rest of the trades, one shot. Everybody, this is for everybody. So if you've not done it still, please go and do it. Very important. I love you all. So see you all in our next meeting. We are going to drop the recording in by 5 p.m. The recording will be available on the YouTube channel so everybody can re-watch, listen and make notes. And then when the market sells out, you apply this capital management and you have profitable crypto thinkers trading. Okay, trading is easy. Trading is easy with Team Crypto Thinkers. Just follow our trading strategies and rules. Don't go behind and be trading other coins and picking your own settings and pumping money in your first buy-in amount. You have $300 capital. Your first buy-in amount is $200. You are just mismanaging your capital. Please don't do that to your capital. Follow rules, okay? Yeah. So we'll end the meeting. Okay, Mrs. K, you want to say something?
No. Thank you
Oh,
very
okay.
much. Thank you. God
Thank
bless
you.
you.
Okay, please, you all understand the class. If you don't understand, you re-watch the video again, jot down notes, and then check your trades one by one. Open your margin configuration, and then the strategy you are using. You go and open the Excel sheet. It's on the lecture hall. You tap on the name of the lecture hall. You see files. Tap on the word files, and you see the Excel sheet right there. Tap on it. It will open up, and the strategy you are using, you see the settings. Compare it to your Royal Q margin configuration. Make sure it tallies and you're good to go. Okay, don't complicate your trading. We just started the year. Make every correction you need to make before the market pumps again. Okay, so you can have backup USDT to buy today's market. All right, so let me stop the recording. Okay, so
Thank you.
page. Hello, Chief Tolu. Hello,
Yes, ma.
sir.
Yes, ma.
Okay.
I can hear you. Hello?
Oh, yes, please. I can hear you.
Yeah, thank you for the session.
Oh, you're welcome.
All right, take care.
Oh, okay,
Thank
okay,
you,
okay.
ma'am.
Thank you, Perpetual. Hey, coach, yeah, back. Okay, thank you, everybody. Let me acknowledge people who came. Thank you, Coach Perpetua. Thank you, Chief Tolu. Thank you, Mrs. K. Thank you, Senior Smith. Thank you, Sir Joseph, Sir Kasim, Sir Ifeni, Sir Mark, Mr. Mohammed, Mr. Abusie. Oh God, help me pronounce the names. Thank you, Madam Miss G. Who's that? Thank you, Coach Abby. Thank you, Mohammed. Thank you, Sir Wale. Thank you, Chichi. Hey, Chichi. Gift. It's a long time I saw you. Thank you, Madam Nonye. I hope I pronounce it well. Thank you so much for coming. We're going to have more sections. Just keep attending the meeting and have your Royal Q notebook beside you because it's going to go a long way. You can pass it on to your children to learn it. This business is a business your children can inherit. Your job, your children can't inherit. Those government work, once you move out, they'll replace you with another person. Your children can't inherit your government job. It is only your business that your children can inherit. So build your Royal Q business well so that you can be able to feed your family and your own needs too. I love you all. It's me, Mimi, and I'm Tinka from the Royal Q Team Crypto Thinkers. Here, making wealth is easy with Royal Q Thinkers. Bye.
Bye-bye. Thank you very much.
Thank
God
you.
bless you. Love you. Bye,
Thank
everyone.
you. Okay, so let me stop the recording.